The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Good Monday morning to you. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I hope that you had an absolutely fabulous weekend out here, coming to you from obviously downtown Clearwater. In fact, right on the water, and the reports are good. The storm really bypassing most of Tampa and Clearwater. In fact, the central part of the state, Orlando area, the eastern seaboard of the state, the South Florida area, Miami, Fort Lauderdale, Boca, Palm Beach, getting hammered with rain out here. But in Tampa, other than a little storm that came in at about 4:30 this morning, we have worse rainstorms than what came in this morning. We have certainly been spared any brunt of the force out there. That storm still churning up in the Gulf and making its way towards New Orleans. Of course, they don't really know where it's going to hit just yet, so we'll obviously pay attention. We're certainly grateful for the fact that the storm has missed us, and we hope it just simply misses all the major cities out there. Maybe peters out, or at least just comes in a non-populated area out there. But folks, I absolutely treasure your presence here with me today, and my outcome is to help you to become a better money master. But mostly it is to provide you with those tools that help us to be able to lead an inspiring life. So let's go take a look at one of those tools, and it's no wonder that tool is the tool of gratitude. Folks, I am certainly grateful for at least the Tampa area, and for me specifically, that we were spared the storm out there. But, and so, when I think about that, look, I know it's going to hit somewhere, but still when you take a look at that tool of gratitude, I know that it is the most important tool that you can have in your toolbox. And that it's one of those tools that is typically most overlooked. Now, when you take a look at today's technology, when I talk about today's technology, I'm talking about how about the mobile devices, the iPads that you have out there. Virtually everyone's got some type of mobile device, and if you look on it, there's usually a little memo button in there. And sometimes you put maybe your grocery list or something like that. But here's what you really should have inside your memo pad, at least on one of those pads. I want you to write down, by the end of the day, if you don't already have it, I want you to write down the 10 things that you are absolutely most grateful for in your life. There's no way to have a wrong answer here, folks, but just simply write down those 10 things that you are most grateful for. It can be family related, it could be work, it could be things that you own, could be, something that you're doing. Whatever it is, just write down those 10 things that you are most grateful for. You want to have a gratitude list. That's really what I call it out there, and everyone should have it. And the reason that you should have it, folks, is because every now and then the universe is going to simply throw you a curveball. That curveball is nothing more than a test to determine just how badly you want whatever it is that next mission it is that you're working on. And what I want you to understand is you are way bigger than anything that can happen to you. Each of us are much bigger than anything that can happen to us. Now, at that moment when you've got that fear, something coming across you, one of the best things that you could do is go to your gratitude list. So if you've got it right there in your memo pad, maybe on a piece of paper, maybe it's hanging from your screen, folks, what you will do is you'll be able to totally change your state. And that's what you need to do, is you always need to be able to make sure that when you're making decisions, because, folks, decisions are what will impact your destiny, you want to make sure that you are coming from an area of strength. So just please sit down, write down your gratitude list. I am certainly grateful for your presence here today. I'm grateful just simply for the opportunity that I have each and every day to be able to do what it is that I love to do, and that is being here with you, folks. So write down and make sure you put down that gratitude list. In fact, I would then go ahead and do this. Maybe at the very end of your gratitude list, because questions absolutely control your focus. So you've got something that happens to you that maybe is disappointment, statement maybe is troublesome, and you go to your gratitude list and you can say, hey, Steve, that didn't really change me up a whole lot. That didn't get me in a positive state of mind. Well, then here's the last piece of that puzzle, folks. I want you to write this down, because questions control your focus. And all you need to do then is write this question right underneath your gratitude list, and it just has to say, how can I appreciate even more all the love, all of the guidance that is inside of me right now, and everything that I'm grateful for? Ask yourself that question, folks. How can I appreciate even more all of the love and guidance that is within me right now, or inside of me right now, and everything that I'm grateful for, folks? That will absolutely give you an empowering question, and that is all you need out there. So let's go get to these markets out here. If you are watching us on Tiger TV, you're taking a look at my screen here. We're looking at the 30-minute ES mini chart. That's the S&P futures. If you're listening on the radio, thank you so much for doing it. Maybe you're listening on TFNN.mobi. You can always catch the archive of this show on Channel 9. As we take a look at the ES mini, when we were taking a look at, if you're listening on Friday's show, and really it was probably Friday's show as we were doing the Nadex Bull Bear option hour out there, I was actually putting on a spread. I was taking a look at two sides of the market, because what I was looking at was the ES mini here. I was looking at the 30-minute chart on the ES mini, and it was at a level where it was going to make a break one way or another. It was either going to be moving lower or it was going to be moving higher. Why? Well, there were a number of reasons. One, it was completing an A to B equals CD pattern. You know, another reason, it was going against the hammer that's further over on the left-hand side of the chart. I'm not going to go ahead and put that up here right now. It was absolutely covered on Friday out there. And what I was waiting for was a signal. The market is always giving you signals, folks. The market is always communicating to us. What you want to be paying attention to is you want to be paying attention to the candles. Now, I prefer candles over bars, just simply because it's visual. It's easier for me to read exactly what's going on between the bulls and the bears. And at 10:30, let me just make sure here, what was the time? 10:30. At 10:30 is when we got our first signal between the bulls and the bears for that trading session. After making a 1-to-1 A to B equals CD down, it gave us a bullish engulfing candle. And then, boom, the market moved up from there. In fact, if we take a look at where it moved up from there, you never know where a market's going to go, much like a hurricane. But what you can do is you can use tools out there. You can use retracement tools. When you do an A to B equals CD, what you want to do is you want to start all the way from your A point, in this case here, on the ES Mini 30-minute chart, coming in at 11 o'clock, that price point being 1424.75. What you want to do is you want to go from your A point to the D point, in essence to the low that was put in as we were on the air at 9 o'clock in the morning, as the ES Mini got down to 1395.25. Because one of those first targets, just simply a normal move, well, first you got two normal moves. The first one's going to be the 0.382 level. That's going to be your dead cat bounce. The second area is going to be 0.618. And what did the market do? It moved right up into that 0.618 area. That was a price point projection of 1413. And if you take a look at coming into, let's see, where did we get to at the close? You got up to the close, you got up to 1412. 1412 versus 1413 out there. So the markets are always communicating to us here. Right now, as it's up in that 0.618 level here, what you've got is you've got a bearish engulfing candle. That occurred here as we were coming on the show, as we're coming on the air at 9 o'clock a few minutes ago, and we want to have a confirmation of that. Now, there's no A to B equals CD pattern out here that's present. Well, there is a possible A to B equals CD present to the upside. The market's always making that. If we take a look at that, though, folks, that is going to get you up and above the highs from August the 21st out there. In the ES Mini, it's 1424.75. If you want to take a look where that A to B equals CD, it looks like we're going to go from the low that came in at 9 o'clock on Friday morning all the way to the high that was put in here at 7:30 last night. Now, the low here that was put in came down at 3:30 this morning. Not much of a retracement out there, just simply the one-to-one. If that ends up being where the little rocket ship takes off, that gets you up to 1426. But the reality is, with such a shallow retracement, that'll send you up to 1431.50. That would be the target on here. But right now, you've got the market back at that 0.618 level. It's a normal area where you would expect to see a retracement. We'll see if we get a lower close here as we come into the open 15 minutes from now. And if we do, then what we'll see here is we'll see a pullback in the market. We'll do just a normal retracement before it goes ahead and identifies the A to B equals CD leg up in the ES Mini. You know what we should do here? We don't often do this early in the show, but let's go take a look at the Apple. Why? Because after the close on Monday, Apple and Samsung, Apple getting a ruling, a $1 billion windfall. It's more than just the $1 billion that they get, folks. And if we take a look at Apple this morning here, we'll pull that chart up on the screen in the pre-market. Apple closed at 663 on Friday, trading out right now at 679.62. You say, Steve, what is that doing? All that it's doing is getting back up to where we made the 1.272 Gartley sell pattern. The actual high of that Gartley pattern, the actual candle high that came in on the trading session of August 21st was 674.88. 675 and change was the actual 1.272 expansion. If Apple blows through this area, if we see some big volume come in on this move here, what Apple will do is it will head up into the 1.618 expansion of those swing points. When I say those swing points, I'm talking about the high that was established on April 10th out at 644, even Steven, all the way down to the low that was put in at 528.66 on May the 18th. The 1.618 expansion of that, $715. That is if Apple takes out this 1.272 Gartley butterfly sell pattern out there. That is what is moving the markets. If we take a look at the NASDAQ futures here right now, they're up 0.6%, up 16 3/4 points. Let's go take a look at the daily chart on the NQ out here, and we'll see exactly what that is doing. It is going right into a resistance area, and probably the NQ, the NASDAQ futures, probably the most important. Well, there's really a couple things that are very important for us to follow today. We can see with the NASDAQ futures right now going into the area of resistance. That resistance was set up on March 28th. The high out there was 27.90. You've got the 27.90, 150 on April the 3rd. That area was tested. You had a little bearish engulfing candle on August 21st as it got up to 28.0250. I suspect that we'll see 28.0250, maybe a little bit higher. That area tested. You get a close above that, and then on the NASDAQ futures, folks, what you've got is you've got a real breakout ensuing here. You know, we'll go take a look at the other daily charts out here, see what they are doing. But as the NASDAQ futures here that are moving this morning, right behind them, the Russell 2000. If we take a look at the Russell 2000 futures, trading out at 812. And let me pull this up here so it's easier to see on TigerTV. Come on, there we go. Okay, and we take a look at the Russell 2000 futures here. You've got a much longer way to get up to the resistance level, and that is the top of this evening star candle that formed here on July 5th. An evening star, folks, a 3-candle formation. You've got a large up day, as it did on July the 3rd. You then have this little doji, and it closed near the old session highs there. That was on July 5th, and then a wide-ranging bar on the way down. And that's what happened on July the 6th out there. So the top of that resistance area happens to be 820.50. I suspect that if the markets move higher today, which it looks like they do at this stage, that will be the area that the Russell 2000 will find as a resistance zone. It certainly can go up to the highs put in on August the 23rd. That would be up at the 826.80 level. 877-927-6648. That's our call-in number. Let's see, we got King Dollar back 4 ticks right now. Gold trading off $3. Silver up 19 cents. It's so great to be here with you, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. And if we take a look around the world here, let's go take a look at the DAX. It's trading up at 7,023. That's up 52 points. That's about 0.75%. Now, it's running into a resistance area. It is trying to test the swing point high from August 21st. The low out there is 7,041.73. So far today, it's gotten up to 7,041.53. It did already test. No, it didn't. 73. So it is trying to get up there. It's also running into a resistance candle, out here from August 21st. The high of that candle, 7,051.77. Look for the DAX to, I would say look for the DAX to tag that August 21st candle out there. If we go back to the futures here real quickly, we'll go take a look at the Dow. We didn't look at the Dow futures out there, so we'll do that. Then we'll go take a look at what's going on in the currency market. You can see Dow futures now trading back just maybe a point or two. They're trading out at 13,141. So the 149. So the Dow future is actually showing some weakness out here. The Dow has actually been the one of the weaker indices out here during the last several trading sessions. Now, what it did do on Friday was it made a bullish engulfing candle. The Dow had made enough of a retracement down that the candle that formed on Friday was a bullish engulfing candle. You get it closed below 13,162, and from my line of work, it kind of negates that candle out there. You get a close above it, says that, it certainly wants to go at least, I would say, test the highs, the August 21st highs, out at 13,308. So let's go take a look at what's going on inside the currency market. If we take a look at the King dollar, we'll start off there. You can see the King pulling back just slightly here this morning. No great shakes out there. It does have some pretty decent support down at the, right here at the 81.35 level, at the 81.35 level, at the 81.40 level, going back to May the 20th. There you had volume of about 35,000 contracts. It came back with 26,000 contracts on the 23rd. Moved off of that area on Friday with 22,000 contracts. And what's that really all about? Well, that is all about the euro out here. If we go take a look at the euro, see what she is doing here. The euro giving us really the best signs of all with regard to the market being able to pull back from here. And that is that on the euro, on the daily chart, you're looking at a number of different patterns. Number one, I'm going to go ahead and erase a couple of these just to make it a little bit easier for you to look at on TigerTV. The first one that it created was the A to B equals CD up. It made a 1 to 1.272, A to B equals CD up. That price projection would have been 1.25754. It got above that on Thursday, got up to a level of 1.25883, pulled back, closed out at 1.25608, completes that 1 to 1.272, A to B equals CD, gives you that bearish engulfing candle on Friday. Now today it's, in this case here, just like we were looking at on the Dow, the close of Friday's session, 1.25104. You get a close above that. It really negates that as far as my line of work, of course. However, with it coming where you have so many patterns lining up with each other, that really was the candle signal there that the euro wants to pull back. Now, that should be an area of very strong support. So we've got that A to B equals CD. I'm going to go ahead and erase that off of the screen here. And, whoops, let's see here. Let's delete that. So we got that A to B equals CD. It was also completing here what? It was completing a Gartley pattern, a longer-term Gartley sell pattern. That's coming off of the high that was put in on June 18th. That high out there, 1.27463. So what it made was it made a 0.786 retracement. And while it was doing that, that was making the A to B equals CD. That's the required move in order to be able to get a Gartley out there. Now, you love it when a Gartley comes together at a 0.786 retracement level. Why? Because that's really where your back is up against the wall. Well, now, when you take a look at the other patterns that are out there, you've got the inverted head and shoulders. I've got that notated on my screen. You also have off of a swing point, its most the swing point on August the 6th out there. You've also got a 1.618 butterfly pattern. So you really have an area that is not just sandbagged, okay, as far as drawing a line in the sand. There's a little bit of cement there. What that means is if the euro can punch through that, folks, when a 0.786 Gartley fails, what does that set up? Not just a move of a move. That's going to set up a 1.272 butterfly. But you see what we've got down here, folks. We've got this 1.618 butterfly where the lows were established. We've got two of them out here. If I pull back on the screen, you can see there's two longer-term 1.618 butterflies. And folks, the normal move of a butterfly is to retrace back to the 0.618 or 786 level. That is, in fact, what was done out here in the euro. The next move would be the 1.272 expansion of that butterfly pattern out there. 877-927-6648. Dow futures off about 10 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I believe we're off to the races here. There we go. We got the Dow up 3, S&P's up 2, Composite up 10, Russell 2000 up 3, got Microsoft up 28 ticks, Intel down 10, Google down 13 bucks and change, Cisco up 4 pennies, Apple up 16 bucks, trading out of that 679 level here. They are leading the charge to the upside. Right behind them, you've got Kenexa Corp, KNXA, must be some kind of buyout here. Let's see, Kenexa Corp up 41% here. They approve a share by IBM. Okay, so it looks like IBM is acquiring Kenexa Corp for 41% premium over the close from Friday. We'll go take a look at that stock chart. You got Dollar Thrifty, DTG. They're up 7%, up $6 here right now. You got M&T Bank Corp. M&T Bank Corp being acquired or doing a deal with Hudson City Bank Corp, a merger deal worth about $3.7 billion. That is up 4% this morning. Tiffany and Company, the blue box folks, they're up 6%, up $3.50. I believe they missed numbers, but they are trading up. Must have had some good guidance there. Donaldson Inc. up 7.5%. DCI, Hertz Global Apple up 13.5%. Navistar Inc. NAV up 10%, 7% here this morning. And Avis Budget, all the car companies up this morning here. Avis up 10%. Amazon also up about 0.5% here this morning. To the downside, Google leading the charge there, off $11. We'll take a look at that. Panel, which is Universal Display Corp, they're down 11%. That's off $4 and change. Vera Bradley, I believe they make purses out there. In fact, I know they do. My daughters, remember when they got those things. Vera Bradley, VRA, they're down 7%. Ellie Mae, the mortgage company, ELLI, the ticker symbol, they're down 5.5%. Robert Half, RHI, off 5%. Maxim Integrated. So there's a little bit of everything here for the Bulls and the Bears out there. Let's go start taking a look at some of these stock charts here and see what they're doing. The first place we're going to start here, we'll take a look at Apple. So you can see Apple trading out at $6.79. It's really inside that 1.272 range out there. It's got decent volume off the open, 2.7 million shares out here. Let's go take a look at the company that's being bought out by IBM. Let's go see where that is at, KNXA. And then let's actually go find out what kind of company KNXA is here. I'm going to put this on a longer-term chart out here. We'll put this on a monthly chart. Okay, so they bought these guys at all-time high. So any of you that own this stock, good for you. Let's go take a look and just want to see what these guys do, KNXA, because I'm not familiar with them, and maybe I should be or should have been. Conexa Corp. They provide software as a service solutions that enable organizations to recruit, retain, and develop in employees. Okay, so that thing is trading up here at 45.75. Had a pretty big downdraft going back to November 2007. Nonetheless, let's go take a look what else is moving out there. That would be Dollar Thrifty. So let's go take a look at Dollar Thrifty here, and then we'll see what's the news behind these car rental companies, DTG, all on the move here this morning. Let's click on Dollar Thrifty here. What do we got? Dollar Thrifty. Dollar Thrifty Group trading here. Hertz is going to buy Dollar Thrifty for $2.6 billion. You know, folks, what I have been saying here all along is that what you should be looking for is all kinds of acquisitions that are going to be going on. Why? As we've come through the second quarter here from an earnings standpoint, you've seen all kinds of large companies, especially multinational companies, miss to the top line. You are allowed to do that, especially while the group is doing that, for just a short period of time. And maybe last quarter might be it out there. And so in order for these companies to grow, they're just simply going to have to do it through acquisitions out there in order to be able to grow their top line and bottom line. And then hopefully what they will do is they'll find some additional market share and certainly shave off some expenses. And certainly you would expect that to occur here. And that is and so you got companies that are flush with cash, and this is the way for them to be able to grow right now. So, you should, I expect to see many, many more acquisitions out there. And, today just being another example of that. So if we take a look at Dollar Thrifty Group, and let's put this on a longer term chart as well. Let's put this on the monthly. Let me refresh this here. What they paid for, what Hertz paid for it was, looks like going all the way back really to the highs that were established out here back in May 2011. They traded up to $84.25. It's trading out at $86.97 right now. So if you own that, that's a nice thing. That's Dollar Thrifty Group. Let's go take a look at Tiffany. Let me see what Tiffany actually reported here from an earnings standpoint. We'll also take a look at the stock chart. TIF is the ticker symbol there. So we take a look at Tiffany gapping up, doing it with volume here this morning. And let's go see what that is doing here. I wanted to see what their numbers were. I thought their numbers missed, but let me see here. They did net sales $1.7 billion versus 1.63. Net earnings $173 million versus 171. Okay, so they did not miss it. I must have just been drinking lemonade this morning. And so Tiffany trading up, gapping up over the most recent swing point, but what it's really doing is coming into a sell-off here. So you've got Tiffany, which actually sold off on May the 24th, did it with 13 million shares. And so you're coming back into a natural resistance area here. So we'll see how Tiffany actually trades here today, because this has had a couple of signs of weakness, two very large signs of weakness out here. The first really large sign came in on the, well, there's really three now that we take a look at, well, two. So if we take a look, I take that, yeah. Two signs of weakness out here. So January 10th, Tiffany gaps down with 16 million shares. Folks, it had closed the prior session, so you got wide price spread, closed the prior session on January 9th with close out at $66.94. Got down to a low of $58.81 the following trading session. But again, 16 million shares. If we slide this back, that's the largest downdraft candle that this thing had. What does it do? It moves its way all the way back up to the first area here. Well, let's see, what was it doing? That is the daily chart. I'm going to go ahead and put the weekly chart out here for Tiffany up, and we can take a look at this. So this never is good. This was volume off of the top on August the 5th. That was your first real sign of weakness inside Tiffany's. I want to refresh my screen here, just make sure I've got all the key volume. So then when it moves back up, this is what it was doing. It was really coming into that second sign of weakness out here, which was on December the 2nd, 2011, when it moved down with 27 million shares. So it moves down with 27 million shares, and it moves back up with 18 million shares the week of March 23rd. If we take a look at, there's probably a number of different things. You take a look at probably the trend line here off of the top, and you can see how that trend line was what it was coming back into. If we just simply take a look at a retracement off of the high from October 28th down to the low that was put in, that had really good volume down there on January 13th. You can see it was also making a 0.618 retracement area, so it makes its next move down. If we take a look at that A to B equals CD on the weekly chart here, let's see if that hit that price projection. It did. That price projection was 51.84. It gets down there, gives you a little bullish golfing candle here. The week of July 20th, you move a little bit higher the following week. And now what it's doing is coming right back into another resistance area here. This does not at all look like a buy to me on Tiffany. If we pull this back any further, let's see where else you've got some volume out here. You've got the last time. Well, let's put this on the monthly now. That was the weekly chart. So let's go see what Tiffany has on the monthly chart out here. Let's make sure that we've got all of the live data. And if we take a look at Tiffany, it does certainly have some volume all the way back in October of 2008. And really, I would expect the next area for Tiffany to find some area of support would be down at $32.48, trading out at $62 and change right now. What else do we have here? Let's go take a look at a few stocks here that are grooving to the downside. Well, specifically Google. Why is Google trading off here this morning? They're down almost 2%, down $11 and change. I don't see any news out here on Google. I see no news whatsoever. So gaps down this morning, and it gaps down, getting back inside its range out here. Now, let's just clear this chart off, and let's just start fresh. Let's first start off by taking a look at the weekly chart on Google. So let's start off with the weekly chart. You see the weekly chart here, it did complete an A to B equals CD down at the 552 level. It actually got down to 556 the week of June 15, 2012. So now let's take a look at Google. Google has this, Google had this island reversal candle on a weekly basis, which, folks, you don't see that often. And when you do see it, if you do see it, run away from that island as fast as you can. That means you still got your life, preservers on. And this is actually, this is a classic textbook island reversal candle here. You can see on the weekly basis here on Google. And where I'm going back to is the swing point from January 6th, folks. It gets up to a high of 670.25, closes at its session lows. The session lows for that week, 649.79, closed at 650 and change. So to me, that's closing at its session lows. Creates a shooting star, creates an island reversal. It has everything. And it tried breaking out of that area last week. In fact, it did close above that. Let's just simply go take a look at volume, though. So now let's go benchmark the volume on the island reversal shooting star out there. And so if we take a look at last week, it got up and above it with what? Without volume. Of course, I said with what, so that was a trick question, right? Got up and above it without volume. It is back inside that range here right now. That sets up Google now. Can't bust them up? Then what does it want to do, folks? Wants to bust them down. So that sets up Google moving back towards the bottom of its range out here. That would be back into the 556 level. That is on Google. So that's what she is doing. Let's go take a look at Universal Display. Panel, PANL, is the ticker symbol. That's the second. That's leader percentage-wise. Looks to the downside, off 12% out there. Panel gapping down this morning. Now, this thing here, let's pull this thing back. Let's take a look at this. Let's just clear off the deck here on this stock chart. Let's also take a look at this on the weekly chart. Why weekly? Well, because it certainly can give you the better long-term setup out here. So if we take a look at panel on the weekly chart, what it has done. So here's what it did do. Hope that's proper English. What panel did do was it came back to the original, well, when I say the original, the most recent breakout area. That recent breakout area on the weekly chart, you would be looking at August 19th. It actually broke the following week. You can see this is another textbook example of what you would call wide price spread and accelerated volume. It had all of that. Now, I believe that was something August 26, 2011. Somebody in the den could probably tell me that may have been a result of part of the tsunami problems. Maybe that's what, who cares what it was? It doesn't matter. What you did have was you had wide price spread. And one of the things you want to be able to learn to do, folks, you want to learn to buy breakouts or sell breakdowns. You're just simply reversing. In this case here, the breakout, you had wide price spread and accelerated volume the week of August 26th. That actual breakout is going to be the session before, or actually you can go all the way back to you see the weakest session out here. In this case here, we just go back to the prior week, the low of 27.55, 7.4 million shares. As the price pulled back to that area, did it with 5.9 million shares the week of May 25th, does it following week with 4.5 million shares, and then that next week here, 4.9 million shares before really establishing the low out here, forms a bullish candle down there, tries to move topside. Should have had the ability to move topside, especially when you take a look at the week of August the 10th, 2 weeks ago. 10 million shares coming against a swing point that only had 3.7. But let me see if there is some news on panel, on universal display. And nothing that I see out here. But this thing has been, if we take a look at just simply the trend line on this thing off of the highs out here, just come off of, that's probably not the right trend line to use. Let's come back here off of the trend line back here. This doesn't, looks like the trend lines may not be the best thing to use on this stock chart here. Let me see here. Nah. Not going to even worry about it. Gapping down this morning, though, and the volume, let's go back and put this on the daily, see what this is now doing on the daily that we're taking a look at. Volume that you've got inside this thing, 555,000 shares. So it's trading inside. The last time that this had a sign of strength out here, I see one of Stevie's hammer candles. If we take a look on the daily chart, panel giving you a hammer candle on May 21st on that daily chart out there, that hammer candle had volume of 2.2 million shares. As you got into the middle of that session, came back with 959,000 shares out there. And not completing the A to B equals CD. The actual A to B equals CD on this looks like the price projection here would, I apologize. It did complete the A to B equals CD. Not so fast, Haas. So it completes the A to B equals CD, gives you these little doji candles, shooting, spinning top candles out here on August the 20th, on August the 21st, saying that it wanted a timeout. And now, folks, this thing may possibly be a buy. This is on panel, coming into the August 8th low at $32.27 with less than 1.6 million shares out there. You got to be careful, though, with the gap down. But it is coming back into that area here. Probably a more ideal buy would be Stevie's hammer candle from May 21st out there. 877-927-6648. That's our call-in number. We've got the Dow down 20 points right now. S&P totally flat. Composite up 3. Small caps giving it up, only up 34 cents. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Dow off 23, S&P's off, well, really flat, down 43 pennies, composite up $3, Russell totally flat out there. And you know, it is Marvelous Monday, and on Marvelous Monday, just like every day of the week, folks, we've got 9 hours of programming. After this show here, you've got Tom and I doing the Money Master Show, and then we got a 2-hour special today of Basil Chapman. Basil is filling in for Larry while he is away. Basil from 11 to 1 p.m. today, folks. And from 1 to 2, we go to Texas to Daryl Martin doing the diagnostic trading hour. And, folks, if you get a chance, if you're in the Tampa area, Orlando area, the Miami area, the Fort Lauderdale area, the Gainesville area, any area, come join us on September 22nd, Saturday, September 22nd, for the Nadex workshop. That is, Tom is going to be opening up the workshop. He will be showing you how to trade. Darryl will be showing you how to be able to utilize the Nadex platform to your advantage. You can sign up, all the details on the homepage at tfnn.com. Go sign up for that. That's going to be at the Hyatt Regency here in Tampa. So let's go take a look around the world here. Let's go take a look at the Shanghai. You want to talk about problems, folks. There are problems in that river city. The Shanghai gapping down overnight. They closed out very close to their session lows. 2153.01 is where they closed out. The actual low was 2152.66. So you've got the Shanghai, which if China is supposed to save the planet, they're doing a really poor job. They're trading all the way back. Let's go take a look at this on the let's first look at the monthly chart out here. The monthly chart, folks, it is trading inside the candle that goes all the way back to October 2008. Actually, if I refresh the screen here, I might get... there we go. Okay. So it's trading all the way into October 2008. That says that it really wants to go down and test the 1749 level. That's on the monthly chart. If we take a look at the weekly chart here on the Shanghai, what you can see is very close to completing the 1-to-1 A to B equals CD. It's actually trading just below the point 786 retracement area, which was 2167. Absolutely screaming here that it may want to get all the way back down into that level, at least on the daily chart. The weekly chart would be down into the 1763 area. Pretty amazing out there. If we go take a look at the, let's go take a look at bonds here real quickly. Bonds are not suggesting that the market here wants to bounce. You got the bonds here. We'll take a look at the 30-year Treasury note. It's traded up near its session high. It's out at 148.26 out here. And bonds here, as we take a look at the retracement. So now what I want you to do is come back and take a look at the high that was established on July 25th out at 153.110. And you come all the way down to the low that was put in on August 20th out at 145.03, August 24th, August 21st out there. You can see how it came to that 0.382 level and really didn't rest. It says it didn't need rest. Said it really wanted to go to higher price. Said it wanted to go to that 0.618 level. That would put you up in the 150 range here. So unless there's a little correlation difference here, the bonds are, which is a much larger market than the equity markets, the bonds are not suggesting that the markets here want to go up. If we go take a look at the ES Mini here real quickly before we leave, take a look at that ES Mini 30-minute chart out here. We did have that bearish engulfing candle that we were talking about as we came in at 9 o'clock. You got the confirmation. That very next candle, that sets up at least the market here, the ES Mini pulling back to where? Sweet 618, folks. That should take you back into... Why don't I have the price point out there? How about that? That'll take you back into about 1403. Already hit the 0.382 level. Stay tuned, folks. Tom and I will be up next. Always remember, folks, I love being here with you, and do yourself a favor. Go create that gratitude list. Take care, folks. If you're starting your day, I'll see you tomorrow morning. Bye-bye now.